This week's episode of the ArtTactic Podcast is sponsored by Artbase. Are you managing an art collection, an artist studio, or a gallery? Is it time to bring your collection management skills up to a professional level? We think so. Well, Artbase is the right software to manage your art business. Artbase allows you to track your artworks and contacts in an easy-to-use, powerful database. You just enter your data once and use that data to generate reports, offers, contracts, and much more. They've got a brand new version out with a whole new look that can be used on the cloud from any location on any device. So what are you waiting for? Go to artbase.com now to learn more and be sure to mention ArtTactic for a 15% discount. Thanks for listening to the ArtTactic Podcast. I'm your host, Adam Green. Hope everyone's doing well. Over the past year, we've spoken at length about several aspects of the art world and how they've been impacted by the pandemic. But one area we haven't touched on is art financing, which is the idea of taking out loans against artworks you own. So that may be artworks in your collection if you're a collector, or artworks in your inventory if you're a gallery. The concept is still a pretty niche one, even within the art world, but it seems like it's being considered by an increasing number of people lately, especially at this moment when interest rates are so low. So we wanted to chat with someone from the industry about the latest trends in art financing, as well as how it's been impacted by the pandemic. So in this week's episode of the podcast, we're joined by Joe Charalambous, president and founding partner of TPC Art Finance, a firm that delivers tailored art-backed lending services to the global art community. We hope you enjoy the episode. Thanks so much for listening. Joe, thanks so much for joining us.
Oh, my pleasure. Thanks for having me.
Of course. So I think the art financing industry is very interesting, and it's really an under-the-radar aspect of the art market. It gets covered from time to time in news stories, but a lot of people really don't understand how it works and how prevalent it is. So I'm hoping we can discuss some of these areas with you in detail. But before we begin, tell us a little bit about TPC Art Finance and how it fits in with the art financing landscape.
Sure. So we set TPC Art Finance up in 2017, really with the goal of making art financing a much more accessible and approachable product. If you looked at the sort of landscape before we started, it really was private banks making loans above, $10 million. And then there were some specialty lenders that really focused on the higher end of the market, starting with loans above $3 to $5 million. So we wanted to make art lending available to a much broader client base than what's currently being served. And we've done this in a few ways. One of the ways was to make loans as low as $500,000. And that way, we found that a lot of collectors didn't always want to borrow $5 or $10 million at a time. Sometimes they only wanted, $500,000 or $1 million. And we found that there weren't many lenders that would actually facilitate that. We also broadened the type of artwork and the artwork values that we accept as collateral. So whereas other lenders might accept loans with a minimum value of $1 million, our typical minimum value for artworks as collateral is a $100,000 minimum, really broadening who we can lend to and making the service available to a much broader audience.
That's interesting that you're willing to lend relatively in the lower end of the art market, compared to other lenders at least, and that may lead to the ability to work with more potential clients. So your positioning within this field is pretty fascinating. On the podcast, we've talked to a lot of different areas of the art community to understand the pandemic's impact. How did things unfold in the art financing area when the pandemic initially started, and where are things now?
Yeah, so surprisingly, the art financing market, especially for us, and speaking on, from our perspective, it remained really stable. And looking at it from a portfolio perspective, when COVID first hit and became apparent that it was going to be a longer-term issue in March 2020, one of the considerations really was how will our clients do in this time? Our clients being a specialty lender, private banks typically serve clients that have high net worths, liquid assets. Our clients tend to be more of a sophisticated entrepreneurial type that even in regular times had irregular cash flows and incomes. So we were concerned about how they would be impacted and therefore how the loans would be impacted. And also we were concerned about how, art values would generally be affected by COVID. But as you know, as things unfolded, auction houses were able to adapt and collectors were able to adapt and go digital and buy things digitally. And the art values, when we compare them from 2019 to 2020, from what we found, there was a slight dip, but nothing major. And art values generally remained fairly stable. And then our clients, with the exception of a few cash flow issues, which we were easily able to navigate, fared the COVID fine as well. So, on the whole, from a portfolio perspective, COVID didn't have a huge impact on us. Interestingly, from a demand perspective, we found that there was, a new reasons for borrowing. I think if you looked at before COVID had arrived, 90% of the loans that we were making were to collectors buying more art. And when COVID hit, we found that there was an increase in requests for collectors that were planning to sell their art during COVID. And then when it hit, they looked at this unstable environment and said, I really don't want to sell in this time. Of course, they were selling for a particular reason, and they were looking to get those funds out for a particular purpose. So art lending became a really viable option where they were able to get the liquidity they needed and wait for a better time to sell their artwork. So I think from a demand perspective, COVID had a slight increase in its effect, and then from a demand perspective, from a portfolio perspective, it was relatively stable. So on the whole, the COVID didn't have a huge impact on the lending market from what we saw.
It does feel like there's an opaqueness to the art financing space. Most people, even within the art world, aren't familiar with the specificities of it. So to what extent is art financing a part of the art world, and has its presence in the art market increased significantly over the past few years?
Yeah, so what I found is that one of the bigger challenges in the art financing space isn't necessarily demand for it, it's actually the awareness of it. A lot of the collectors that we work with, many times it's the first time they're ever taking an art-backed loan because they didn't know that they could. And I think this comes down to a few reasons. I think if you speak with a lot of wealth managers, auction house specialists, lawyers, generally any sort of advisor, a lot of the problem is that awareness isn't a key factor. So they haven't really been exposed to art lending before. They're not necessarily comfortable speaking about it because they're not sure about the options that are available. And I think as awareness grows, I think art financing will become a much more utilized service in the art market. So I think it's got its place, and I think it's continually expanding as awareness grows. And I think that's kind of what why people consider it somewhat opaque, really, because they're not sure how it works, how it operates, and what the process is to get a loan. If I have to give you an example, we had a request recently from an art advisor whose client wanted to take an art loan. The advisor had never made a loan before and never gone through the process. And after discussing the situation with them, we were able to provide a loan in 3 to 4 weeks in that situation. And they were really surprised at how simple it was. And I think as advisors and other collectors utilize the service and they're familiar with how it works, I think you'll find that the awareness and the opacity will start to disintegrate, and it will become a much more regularly utilized service in the broader context of the art world.
Who are some of your main clients? What are their roles within the art world? And are there any new audiences you feel like have a lot of potential that you're just starting to gain traction with?
So our clients tend to be the more entrepreneurial type. So small business owners or just general business owners, gallery owners, real estate developers, private equity investors. It's typically high net worth individuals that have their assets stored in more liquid assets. Generally, it's a client base that isn't really served by the private banks because they don't have the liquid investable assets that a private bank can manage. So I think they make up the majority of who we work with, and it's a group that's very transactional. They buy art regularly. They like to take advantage of opportunities as they arise, and they like to use lending services like ours that can provide quick access to capital when they need it. I think when you look at the biggest opportunities, I think one of the areas that is most promising to us is gallery owners and dealers. We really find that most galleries are still not utilizing art lending as a viable sort of long-term solution to their liquidity needs as they maybe could be, particularly as they are businesses that have a lot of their assets stored in art, which are otherwise illiquid unless they sell them. So I think in the future you'll see a much greater demand from galleries, and that's where we expect the biggest growth.
What are we seeing in the broader economy, and how is that translating into the types of interest rates you're able to provide borrowers?
Yeah, so the rates being reduced definitely allowed us to pass this on to our clients. We also found that as rates reduced, it really brought out more demand from potential clients that hadn't in the past considered borrowing. With rates so low, I think it generally increased demand across the board for financing in general, not just art financing.
And can you walk us through the process of actually getting an art loan? So let's say there's a collector considering obtaining a loan against one or multiple artworks in their collection. How does that process work?
Yeah, so one of the things that we really emphasized when we started the business was to make the process as streamlined, as simple as possible. We can really break it down into 3 stages. The first stage is the consultation, where the client lets us know what they need and shares the artwork information with us. From there, we do our research into the artwork to make sure it's viable for a loan and put together a term sheet. Once that's been signed, we then go on to the second stage, which is the due diligence stage. So we carry out our due diligence on the borrower, which includes a soft credit check and a background check. We also then carry out our due diligence on the artwork, and that involves an appraisal and a condition report. Once that's been completed, we go to the final stage, which involves the logistics, and that means moving the artwork into storage if it's not already in storage, and organize the insurance. We simultaneously put together the contracts, and once they're executed, we fund the loan. So the entire process typically takes 2 to 4 weeks. We hold the client's hand throughout the process to make sure they understand what's going on.
And what's the duration of a typical loan you're giving out?
So the loans that we make, they're typically on a shorter term basis. So we make loans typically from 12 to 24 months. In certain situations, we can go slightly longer, but the average is 12 months.
Joe, we appreciate you coming onto the podcast and chatting with us about what you're doing at TPC Art Finance, as well as sharing some trends in the art financing space. I think this is an interesting area to watch over the next few years as more people become aware of the borrowing options that are actually available to them. If our listeners want to learn more about TPC Art Finance, what's the website they can visit?
It's tpcaf.us.
Perfect. Thanks again, Joe. We appreciate it.
My pleasure. Thank you.
We want to thank ArtBase for sponsoring this week's episode of the ArtTactic Podcast. Are you managing an art collection, an artist, studio, or gallery? Is it time to bring your collection management skills up to a professional level? Well, ArtBase is the right software to manage your art business. ArtBase allows you to track your artworks and contacts in an easy-to-use, powerful database. All you do is enter your data once, and you use that data to generate reports, offers, contracts, and a bunch more. They've got a brand new version out with a whole new look that can be used in the cloud from any location on any device. So go to artbase.com now to learn more, and be sure to mention ArtTactic for a 15% discount.